Hey there traders, this is Chris Keen from akeenpointofview.com and this is Currency Watch. We had an interesting day of trading on Wednesday as the majors pushed higher initially against the US dollar after Obama confirmed his second term in office in the USA. Most of the majors pushed higher until about early European trading, where Draghi came out with a comment saying that the debt crisis is having an effect on Germany, slowing down the economy. And this made the majors go into a free fall against the dollar, and the dollar regained all of its post-Obama push higher and some. And now heading into tonight's trading, we have quite a bit of information coming out, and we could see a little bit of volatility, and we have pairs sitting at major support and resistance levels. We're going to take a look at the Euro, Great Britain, and Aussie crosses because the Euro we have the ECB coming out with its interest rate decision. We have the Great Britain with the Great Britain USD. We have the Bank of England coming out with its interest rate expectations and assets purchase program. And in the Aussie, we have the employment report coming out. We'll start out with the Euro USD. And the Euro USD, the ECB is expected to remain on hold by most economists, and then maybe actually do another move after Spain if Spain takes part in the bailout measures they have offered to it. So what we have going into the night is we have the Euro USD sitting right here support. It touched the bottom of the support line with the 0.382 fib at 127.34 and the support zone at 127.50. But you can see the pair, like clockwork, bounced off this level, and now it's not sitting. It's sitting about 30 pips above. And as long as the pair remains above this, and we get a daily close above the 127.50 level, with the ECB news tomorrow, we could see a bounce higher and maybe be back onto a track higher to the top of this range towards the 128.50 level. But if we do get a break lower, the obvious target would be a move down to the 50 fib at 126.02. Now with the Great Britain pound USD cross, we have the Bank of England tomorrow, expected to also remain on hold. And if they do anything, it would be in December, where they could increase more asset purchases. But heading into that decision, the pair is sitting right at resistance here. That has capped the price action so far this week and most of the month, right here at 159.60. The pair would have to break below this level, and it wouldn't have to go that far to test the daily price support and daily fib support at 159.03 and 159.10 level, and it would be hard to break that level. There would be a lot of buyers, I would assume, coming in at that level. So if we do break down to that level, we could get a bounce from there. But if the pair can remain above this 159.60 level, we could get a bounce, and the first test obviously would be the 160.40. So you can see the pair is in a tight range, and we're going to need to get a break of either end. I would prefer to see a break to the top side, just because that would be an easier trade. But if you get a break to the downside, you'd have to watch the technical levels at the 50 fib at 159. The last pair we're going to take a look at is the Aussie, because the Aussie broke higher, as we all know, after the Aussie interest rate report, where they left interest rates on hold, but it couldn't really gain any momentum, and it fell not as much as the other majors actually after the Draghi report, and is now sitting right on the top of the resistance zone at 104.10 and 103.86. So this level is key right here in this area, and we're going to need to look for a bounce or a hold above this resistance zone. If we get a bounce higher, we could be on our way up to the 105.20 level. If we break below this level, though, we could be on the move lower, and the first level will be trendline support, then followed by 102.50. And obviously the reason we're looking at that is because of the employment report that is due in early Asian trading, I believe 7:30 Eastern time, and in that report they're expecting an increase of 0.5k jobs, and I think the employment rate is supposed to go down to 5.5%. So if we have any deviation from that, we could see a little bit of that volatility in that pair heading into overnight Asian trading. All right, that's it. This is Chris Keen from a Keen Point of View. Remember to keep your trades keen and play it clean. And this is Currency Watch.